What's going on, traders? Hope everybody had a great weekend. Want to do a little update here on the E-mini S&P futures as well as the Nasdaq 100. And it looks like I have the NQ Nasdaq 100 already pulled up, so I think we'll get started with that. But of course, before we get into that, reminder that this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. In addition to that, my name is Shark. If this is your first time joining the channel or the recap, thank you so much for joining. Really appreciate it. Don't forget to subscribe to the channel if you like what you're hearing and turn on that notification bell. All right, so we're going to start off with the NQ since I already have it pulled up. But let's go over the economic calendar for this upcoming week. Want to take a look at that and see what we have in store on the economic data front before we really go into anything else. So today is we are at 9:45 Eastern Standard Time right now on October 6th. So we didn't have too much data today, but Tuesday we're going to kick things off with a little bit of Fed speak from Bostic at 10 o'clock, and then a little bit more Fed speak at 10:05. Looks like they're having some type of a event this week. Mirren speaking 10:45. Cash carry, or some that call him crash carry at 11:30. Consumer credit 3 o'clock, and we've got some more Fed speak after the bell closes. Wednesday, October 8th. More Fed speak coming in at 9:20 before the bell opens, and more right at the bell with Barr speaking at 9:30. We have Fed minutes, FOMC minutes from September, 2 o'clock. More Fed speak there at 3:15 and after the bell is closed. Thursday, more Fed speak there, 8:30. Powell speaking opening remarks at some event here. Initial jobless claims coming in at 8:30. More Fed speak at 8:45, 12:45, 3:45, and then a little bit more after the bell. And then on Friday the 10th, we have consumer sentiment coming up at 10 o'clock there. So pay attention to that. All right, so that's all we have on the economic front. Not really too much to speak about, just a lot of FOMC governors speaking. But aside of initial jobless claims and consumer sentiment, really don't have too much there on the docket for us. All right, well, new month here, and I want to just take a quick peek at the monthly chart, see what we're dealing with from that perspective. And it's just been full bull for the last 1, 2, 3, 4, 5, 6 months now, straight up. And we have now really seen this weekly bull flag kind of come to fruition. Only thing that's really scaring me on this chart, not so much that we're going to crash or anything, but really getting cautious on that pullback. Look how far away we are from the 9-period moving average, sitting all the way down at 22,925, and the 20 all the way down at 21,20.75, if you want to call it even. So huge distance there on the moving averages and where price is sitting at right now. So that is definitely a little bit of a concern for me. And you can see the distance here from those moving averages are really quite something to behold. With that said, the trend is up. We really don't want to pick tops or anything like that, but certainly some type of a pullback, I feel like, has been overdue. Maybe we just keep running into Christmas, and then in December we might see something, a bit of a pullback, but bulls can certainly afford it. Let's take a look at the weekly chart now, as we've just grinded up higher here. And in our previous videos, I'm not going to have too much more to say on this because the daily is just going to, really still illustrate this, but the levels are all still kind of, all the same at this point. You can see the weekly down at the top of balance. When we went to the monthly, the weekly 9 was down at the bottom of our balance range. Anything retesting here, I feel like would be normal price action down anywhere 24,100 to 24,300. Anywhere in that area is totally fine, right? Simple retest right there, and then we look up opposed back to the opposing high, and we want to see if we have another change, another break of structure, making another higher high, and the retest up higher. It really seems to me that 26,000 is not out of the question before the year end there. So let's pay attention to see if we get this type of scenario. So if you are late to the party, I really would not be initiating new longs up in this area right here, waiting for that weekly or daily pullback to occur. We do have the Momo getting pretty spicy up here, so paying attention to that as well. Already been kind of raising the flag, the warning flag on that scenario here. And as far as the daily is concerned, again, all levels are the same. You can really actually see here on the daily where that top of that this retracement comes into play here from the action back in August, right in this zone here, and you can see the multiple points of contact in this area here. So you can see that this zone here has been important so far. And pulling back to the 20 even would not be too bad. 24,735, 9. It's not too far away. 24,975. But that 25K so far has been a brick house for the bulls, and they just keep on rebidding. So again, it's hard, not to feel the FOMO, but if you have not already been in the trade, the longs here, it's really just the best that you wait, in my opinion, here. So you had maybe an opportunity right here when we dipped into the 20, but back in the end of September, and it's a decent gain for sure, but nothing like as if you got in back in April, or even back in this area here, back in the beginning of August. All right, so that being said, here we are. The trend is our friend. Definitely getting a little spicy. You can certainly, start to, make this type of argument here, something like this, because this angle of attack is certainly very, very strong here. And, what else is happening right between all these lows, right? There's liquidity right here, some right here, definitely, of course, down here. So I really would not be surprised if we see some type of a move trying to break into these areas and then potentially bounce. But, this ascending wedge, either way, is, it doesn't really make a difference, right? This can just keep going and going and going, like so, and further up. But we only really get that true confirmation, right, if we break and then head down. So wait to see if this actually gives you some type of confirmation on a short signal, rather than trying to pick the tippity top, right? Because sometimes you're right, but it is a fool's errand in the long run, and we want to stay away from those type of trades. So where else would I kind of be looking here on the daily, right, if I was going to have any inclination, right? Well, these previous highs, I think, is a good little spot here. We really can make a bit of a supply zone right in this area, these previous highs, and that kind of equal low right here where we have bounced multiple times. Let me pull this down. Whoops, let me pull this down a little bit further for us. Boom, right in that area, right? So as long as this holds, I really see certainly no real major warning signs for the bulls that they have to worry about. But so even pullbacks into this area could give you at least a little bit better risk to reward. But I'm still a little too extended for me to initiate any true real long positions up in this area. All right, let's get into some day trading levels now, get a little bit more granular with the NQ, and take a look at what we're looking at from that perspective. Let's get into it. All right now here. Okay, and here we are. Just gonna go into this like so. All right, so let's discuss the bull case first for our fellow longs. Let me just extend this a little bit. Boom. Okay, perfect. All right, you can see here we're holding this 135 area. Important zone. Let's see if the bulls can get up and over 25,150. We get back up and over 25,150. Then I think we've got a chance. Got a little bit break there. You can see some reactions in this general area. So we want to see a break and an acceptance over that. And then ultimately looking to retest these prior lows right in this area right here, right around the 25,175 zone. Okay, you can see here we have a couple of wicks, but certainly a big area of contention here is very close as well. So there we go. We break up over 150, 175, only 20 more points. And then we'll see about breaking up and over, coming back to that 25,200 or thereabouts, right? We might get in the high 90s right there because we've got this area right here where we did see some selling pressure come in. So that is another spot that we might not exactly get that whole number. So we'll just keep an eye right there. But if in fact we do not, now we're going to look at some of the short trades here. If we do not get over this 150, right, we come back down and come back down to the 130s area. But yeah, really for me, unless we really break underneath 25,120, right, we would have to do that for me, because in this area right here, right, we're neither making higher highs, higher lows, kind of a chop zone, right? So if we break this, is a confirmation of a break of structure to the upside, and this is the true break on the downside, right? We've got to get under 25,120, and then we can go ahead and see we got a little bit of sell side right here at 25,110 basically, maybe a little bit right here. So plenty areas where we could find some buyers, but basically in that 25,120, 110 area. Okay, would probably really need to be broken, but 120 opens up the gate, and then we can see about the sellers pushing us down in 25,100, 25,95 basically. Anything under that will go to the opposing side, 25,70, 75 area. So that would potentially look something like this. Come back, maybe we double top, maybe we hit again, maybe they balance it up, maybe we sweep it, and then we come down like so. It's all conjecture at that point, but either way, that would be what I'd be looking for at the short side and the long side here. Maybe we boom when we come up, boom, maybe then short we come up to here. Like so. So there's your bull case and bear case for NQ NASDAQ 100 for the day trading perspective. All right, let's get let's get into ES here really quickly and take a look at what we're seeing from the monthly perspective on ES here, and we'll jump into the monthly chart. Okay, and it has just been up and away, just like the NQs here, and here we go. It has just been up and away. Really, we've got the monthly low. I think that's what is that? That's just from this month right now, but I will still mark it off right there. So keep an eye on that that I'm still in NQ mode. Yeah, the 66.73 right there, and I think that could be an important level that we want to pay attention to. And also here, we're just again noting that divergence, that very, very hot level on the reading, on the Momo overbought and oversold indicator. Let's just jump real quick right into the weekly chart, see if we can't get any more analysis or levels off of this particular chart. I think we'll get a little bit better with the daily, but either way, we're going to take a look here. Well, I'll still mark off that 6,800, right? That was Friday's high. We got rejected right there at the whole number. I'm going to mark that off as well. Okay, so we've got the monthly low and the monthly high so far marked off for us. Let me get a little bit closer there. All right, so right now we're trying to create a little bit of balance range within that, basically that 6,800 and the 66.80 level. So paying attention to that very closely. Super spicy on our Momo here for overbought on the weekly. Let's get into the daily now and see what we can see. Yeah, and I think these opposing highs, right? These equal highs will be a next important area that we want to mark off, and I will do that. Boom. 67.57 right there. The highs from the 23rd, 22nd, those equal highs. Let's see if we break under that. We've got the 9. If we break under that 67.57, probably got a little day. It's not that far away from the 9 period moving average. So, you probably could find some support there. Watch out for a potential hammer or something like that. And we sweep the 9 period moving average, then go ahead and recapture. That might be a nice sign for a long on the daily chart. Still not the best positioning for me overall, trade location wise. Again, here, just look how far we are from that 20 period moving average. But I think that underneath that 9 certainly will be the opening gates for a little bit more downside. But the structural level at that 67.57 is just too close. The 9 sitting at 67.48. So it's really not that far away. You can still probably get 10, 12, whatever points it is into that area. Maybe we do get that sweep, you get a little bit more, but I wouldn't be surprised what we have if that breaks and then recaptures either towards the end of the day. If we break under it, everything's looking real bad, and then we sweep up towards the end of the day and end up recapturing that level. Wouldn't surprise me in the least. All right, so got some new levels here for us that I will be watching. Let's get into the day trading chart here and take a look at some levels that I'll be watching for tomorrow. I did post this on my Twitter for everybody to take a look at as well, if that is something that interests you. But here they are, and we will go over them together right now. Okay, so as long as we hold 67.77, really have no issues here for the Bears or for the Bulls, but really ultimately, right, we've got to take out these equal highs here. The low from earlier in the evening over at 67.81, 67.80. Need up and over that for the Bulls and create a higher high break of structure here, and then back up 67.84. We can see what happens if we come into this area, a possible area of contention there. As you can see, this liquidity hanging out, but up and over that, and then we can contend with the 200 SMA, back testing it here. And that's pretty slow moving, so we'll see how quickly that moves. But up and over, find acceptance under that 67.84, 85 area, 67.87, another 3 or 4 points up higher, and maybe then we come into this small volume point of control on the 5 minute up at the 67.89, 67.90 area. So that's what I'll be looking for, and then potential rejections back down. Right, what would the Bulls need, what would the Bears need to see? We need to see some type of acceptance right under here. You need to see some candles close in this area on a longer time frame. Then we can look to come into these lows right here, 67.72, 67.70. That would be the next area I will be watching for as far as for downside. In fact, if we can break that, then we can look to try out the lows from back last week. 67.66 would be my next target on the downside. Underneath, finding acceptance under 67.72. So that's what we'll be watching there. So we have a plan now for day trading for the ES and the NASDAQ 100. Just going to take a quick look around the block at some of the ancillary data that we like to look at, or that I like to look at. Help me formulate this game plan every week. And right here, we are looking at the SMH today. Big news on AMD that was really driving. This was almost up 3% today, but most of the sector is green today and strong breath overall. Only weakness was in the Dow a little bit, but NQ was, the Qs were strong today. IWM was strong, closing a little bit flat overall. The one thing I did notice that was interesting, ADD, even considering SMH was up so much, ADD had a hard time staying above the zero line today, so that was interesting to me as far as the divergence in the price action. But either way, interesting to see what happens tomorrow. Did get a little bit of a sell at the end of the day. Do we have some continuation on that on a potential turnaround Tuesday? I'm not 100% sure, but let's find out. We'll know tomorrow. Excuse me. I'm gonna drink of water here. All right, starting off where I'm on, just to make things easy for us. How many stocks here on the top column? How many stocks here in the S&P SPX 500 are trading over their 50-period moving average? A little bit of weakness, right? We're still seeing this divergence in the S&P making new highs, but yet we are seeing lower highs within this kind of more granular breadth indicator here. So this is interesting. Nothing really to be concerned about. Still over the 50% level. So as long as that holds, I don't really have an issue with it. But this is definitely interesting that we have been unable to really break out and back up into that 75% reading right now. So that's going to be a little bit tough, or a little bit of divergence. First red flag, I guess I would put a small red flag, because we are still over the 50%, but worth noting nevertheless. All right, let's take a look at the 10-year really quickly. And still reinverting, okay, and starting to see some cracks in the labor market. And this is what we have been talking about. Let's see if those continue. The one-day VIX, really just nothing going on here, right? Unless we get over 15. No real worries about volatility there. New highs versus new lows. Let's take a look. Actually, not too bad here. Oh, still over the zero line. That's really all I care about. And a 137 reading, not too shabby right there. That is all good. Here is another potential small red flag. Just posted about this on my Twitter as well. Got a major divergence here in the junk bonds. You can see SPX, the SPY, making new highs. But yet, what is the junk bonds doing? Divergence, divergence, divergence. Okay, another little warning sign right here for some potential pullback. Doesn't mean to go ahead and short the S&P with your grandmother's retirement fund, but a divergence worth noting. Let's see if we can find anything else that might signal to us any type of weakness potentially. All right, well, the VIX futures here, no surprise, still in contango. No issues there as far as the VIX futures, bond ratios. And you know what? I should just pull up. Okay, let's see the bonds here pulling back here, but coming back into this big area. The 7-year should definitely bounce right here as it comes back and retests. If this bounces, watch for TNX to take a nosedive. Let's just take a look at the TLT here. It needs to hold 88.40, and not an issue there. As long as that holds, and I'm not really too worried about that. Okay, here are the bond ratio on the bottom, but credit spreads on the top. All right, this one's coming up a little bit, but nothing. Risk off, no really issues here. LQD with that same divergence on SPX, so there's another little red flag. Okay, but nothing too crazy. Haven't taken a look at transports or the Dow recently. Let's take a quick look. Okay, transports looking like they're setting up, still diverging, but nothing too crazy. But transport's still above the 20, hanging out at volume point of control, really not doing much there. So not too much to report on that front. And taking a look at, no, I don't need to look at the federal funds rate. Just trying to look at the yield and the dollar. Dollar finally coming back here, holding over the 97, 93. This is good here for the dollar. Came back, didn't even retest it. Should probably come back, either retest these highs from up in the 89 area, but ultimately, yeah, 89.60 should come back into that area. Let's see if it breaks over. If that is the case, 99.40 is probably on the rise here. All right, we're talking about that potential bounce on the bonds. Potential bounce on the bonds. Let's see if the yields get up to about 42, 4.2, and then we will see about this happening here, double bottom potentially. But if the 4.1 breaks, head back down to the 40s, the low 40s once again. So that's kind of the trade there for the bonds and the yields. And let's just keep moving along. Let's just take a quick look at the put-call ratio. And the VIX. Okay, put-call ratio starting to try to break in here. A little bit interesting. Nothing really too crazy. So I could just see this snapping back within its range. But keep a note on that. Volatility for the VIX. All right, well, we're still over our 15 handle and over our 1575. So as long as that holds up, at least that gives a little bit of opportunity. We do this, and we can potentially see back up into the 18, 19 area as long as we hold. So that is another possibility for us as well. All right, well, really quick run through today. Went over everything I needed to. Start of the month, I'm wishing everybody a great, profitable October. And the most important thing to that is following your plan and being prepared before the market opens. And look what you're doing right here, standing here with me, going over some charts. Really appreciate that and pat yourself on the back for that. This is what it takes each and every single week. So again, remember, trade your plan, plan your trades. A profitable trader can only exist if you are a prepared trader. So again, my name is Shark. Again, if you liked the video, the content, the information, don't forget, give me a follow. It's free, means a lot to me. And I hope everybody has a great month, a great week. Let's see what we get for the rest of October. All right, take care, and I will see you later.